The almighty US dollar continues to wreak havoc on the rest of the world. You've probably heard of Brent Johnson's dollar milkshake theory, which suggests the dollar will strengthen by sucking up all of the global liquidity. But what if there's more to the story? What if the dollar's strength becomes its ultimate weakness? Today, I suggest a new theory, one that points to a bright orange future instead of a gold one. You won't want to miss it. Hey, what's up, everybody? This is Dante Cook with Bitcoin Simply, helping you to understand macro and the markets in a simple way. Let's get into today's episode. Today, we're diving deep on the dollar milkshake theory from Brent Johnson, and where I think it falls short, or it's incomplete. Let me start off by saying that I'm a huge fan of Brent Johnson. I've been a fan of his since 2018 when he started creating content on Real Vision. I agree with 95% of Brent's worldview, even though I don't know the guy personally. I want to live in Puerto Rico and not pay a ton of taxes. I believe that the government expansion and taxation has gotten out of control. I believe that a strong dollar is bad for the rest of the world. And the strong dollar, like Alex Gladstein says in his books and his writing, has created a lot of the economic challenges that many people face in smaller and developing countries. I believe that global debt levels have gone to ridiculous levels that are incomprehensible for normal minds. And that's driving US stocks to all-time highs. The S&P 500 is actually 300 points higher than the highest numbers that analysts had coming into the year. Global liquidity is driving assets like gold to the moon. And I want to say congratulations to all my gold bugs out there. I think gold has set all-time highs like 4 days in a row or something like that. I know you've been waiting years for outperformance, and finally that year has come. And it's good to see gold and silver at the top of the list of best performing assets. It's just not the best. But here's my beef when it comes to Brent and the dollar milkshake theory. For the longest time, he said that the only answer to the dollar collapsing or de-dollarization or the dollar rising in strength is gold. And he makes statements that are kind of crass, like you either understand it or you don't. This is how the world works. But somehow when people in the Bitcoin space have been saying these sorts of things for years and Bitcoin's price has responded accordingly, he doesn't say, this is just how the world works, or you're right. It's just a speculative asset. In the past, he's denigrated really smart people in the Bitcoin community and makes overall statements like everyone in the Bitcoin community is polarized, or they only want Trump because he's claiming to be after Bitcoin votes. But you can't say that all people in an entire community are just crazy. There's crazy people in the gold community too. There has to be some sort of nuance. People that he runs with, like Mike Green or people in his crew, continue to badmouth Bitcoin. But if you actually look under the hood at what they own or what they do, like Mike Green, for example, of Simplify Asset Management, when you look at his top performing ETFs or funds, the top one on the list is the Bitcoin Maxi Fund. Kind of ironic. But in Brent's fairness, he has lightened up on his Bitcoin stances over the last few months, like his recent interview with Raoul Pal or his recent interview with Anthony Scaramucci. So I will give him a little bit of grace. But let me get to the dollar milkshake theory for those of you who don't know what it is. The dollar milkshake theory, in a nutshell, says that it is the global demand basis for all currency and all trade in the world. And so whenever there's a crisis, whenever there's a rise in assets, whenever there's a need to create more liquidity in the global system, you have to be reliant on dollars. And so this means that in whatever scenario, whether it's deleveraging or a deflationary scenario, the dollar continues to rise. And when it does, it sucks up liquidity from all around the world. The dollar milkshake theory. So let me explain the dollar milkshake theory pretty succinctly. The dollar is used by institutions, banks, and other partners everywhere around the world, and it is the primary basis for global trade. 87% of all trade globally comes from the US dollar, and all debts are denominated in dollars. Therefore, it is the global reserve currency of the world. Another thing that drives people to the dollar is the Eurodollar market. Because people don't have the ability to print the dollar, they have to post US dollar assets or collateral in order to create loans. So therefore, all of the money that is in the rest of the world, by majority, in large part, is created by US dollar denominated assets and out of thin air. Everyone knows that the US economy is a relatively safe place to store your wealth and your money because it can't be stolen, it can't be confiscated. We have a pretty straightforward legal system. This allows more capital to flow into US markets versus other places around the world. And this further increases the dominance of the dollar. And more people place their money in the US stock market versus emerging markets, which again creates the disparities like you see in Lynn Alden's latest chart in her latest report on global liquidity and its correlation to Bitcoin, of this disparity between the S&P 500 and the emerging market indices. This all creates this doom loop which sucks more liquidity and more debt into the United States dollar. Brent Johnson explains all of these factors incredibly well in his latest interview with Raoul Pal that he did a few months ago.
Since the 50s and 60s, banks, institutions, corporations have started using and borrowing and spending using dollars outside the United States. And so it is now the global currency. The second part of this that's very important to understand is all of the dollar debt. When I first came across the Eurodollar market, and then I realized they had all this dollar debt, I was like, yeah, but it sucks because they owe it all to the United States. Then I figured out they don't owe it to the United States. The US didn't lend them all this money. They lent it to each other. So it is not, and the rest of the world cannot create dollars out of thin air other than by loaning new money into existence. So it's extending credit further. So it's basically a cashless / reserveless system. It is, so it must grow. There is
the function, and debt is the essential function of it. It doesn't operate without it.
Exactly. So it cannot contract. If it contracts, it can, but if it contracts, it crashes. If it contracts continually, it crashes. So it can contract for periods of time, but then it has to get recapitalized or new loans have to be created to get it expanding again.
Here's where I think the dollar milkshake theory falls down, and where I believe that me and the rest of the Bitcoin community have some subtle differences. We all agree that a move away from the dollar is not going to come without crisis and upheaval. Things are not going to be pretty if people just move away from the dollar. Someone is going to have to pay. As they say, there's nothing that's free in the world. But into which assets that the money will flow into in the future is where we differ. Brent believes that it's gold, and we believe that it's Bitcoin. And this leads us to the dollar obesity theory, which is the dollar becomes so big, it sucks up so much liquidity from stocks, from gold, from everything else, that it becomes too big and actually becomes the reason why it fails. Preston Pitch says this so well in his recent interview with Safedine about the dollar obesity theory and why Bitcoin is going to be the greatest absorber of all of this global liquidity. It's a great 3-minute clip. I encourage you to watch the whole thing. Stick with me.
You know what, Safe? This is the misconception, and you hear it being propagated by legacy financiers. Like Brent Johnson has this dollar milkshake theory, and I think what people do is they hear this theory because the theory is relative to all the other just total crap currencies that the dollar is going to get stronger, which I totally agree with. The dollar is going to keep getting stronger. It's going to take over everything relative to all these other crap fiat currencies. Okay.
Exactly. They're beating up the Argentinian peso, the Turkish lira. Congratulations.
Yeah, it's crushing it. Great job. But where they're missing the boat is the dollar dies by gorging itself, almost like a 500-pound human that's sitting on the couch all day, just eating potato chips. Okay. And it can't eat enough of this fiat food. And it's literally going to kill itself there on the couch. That's the dollar. Okay. And how it's doing this is it requires the suffocation of spreading its dollars all over the world and having to overextend itself. And then the next year it has to double that, right? And that's how the dollar dies, is through gorging itself and spreading itself so far and so much, because at the end of the day, there's this little thing called Bitcoin. And there's only 21 million of them. And as this thing continues to gorge itself and expand itself relative to Bitcoin, it's going to look like a total scam to anybody that is paying attention. We've been in the space for a few years. We can see it. It's very clear to us because we've seen it relative to the dollar for enough years and enough cycles at this point that it's just freaking obvious. But a lot of people are just now starting to show up and ask these questions and see the dollar being expanded, and they're seeing the price. When it hit 70,000, then went down to wherever it went, 16 or whatever it got down to. Everybody comes back with the headlines yet again on the Wall Street Journal, Bloomberg, you name it. Bitcoin's dead. No, it's not dead. It's just resetting itself against this dollar behemoth that took a break to go to the fridge to get more potato chips and fast food out of the refrigerator so it could gorge itself once again in the next cycle. So this is all I'm trying to say. The dollar expanding itself does not mean it's winning. And that is a common misconception that people have. Just like going back to the Monopoly board, if I double the money supply, it's not that the fiat money that I'm adding into the game is winning. What's winning is Park Place that just doubled in value, which is scarce. You can't create any more Park Places on the board, can you? But you can sure as heck add a whole bunch more fiat currency into the game. That doesn't mean it's winning. You don't want to hold that garbage.
As David Packard, one of the co-founders of Hewlett-Packard, says, more companies die from indigestion than starvation. And these things are true for empires as well, like the Roman Empire, which expanded so wide and so far and meddled in so many things that it began to rot at its core because of its size. The same thing is true for the dollar. This is the dollar obesity theory. And here's why the world's going to move towards Bitcoin. I took a course from the Harvard Business School that was taught by Clayton Christensen on the innovator's dilemma and disruption in markets. And basically, innovation in markets happens at the edges, not from the core. It happens from the bottom of the market, the rebar market, he calls it. New markets and new innovations are created at the edges and the margins, like Amazon in 1999 with books, or Microsoft with just an operating system in the late 80s, or the Apple taking over the world of computers in our pockets with a simple iPod, or NVIDIA taking a completely different route to dominating the chip world by focusing on graphics processors for video games and not CPUs and competing with Intel. Money is an emergent phenomenon, not an I told you phenomenon, like paper currency evolving in the 7th century, or even the dollar emerging over a course of 50 years as there was global economic unrest and the United States came out on top. But it was the market that ultimately decided that dollars would be the global reserve currency. It wasn't a top-down thing. And so I believe that Bitcoin is an emergent phenomenon. It is an emergent money. Bitcoin is gold on a network, as Michael Saylor says in his recent interview.
There's an emergent appreciation that Bitcoin is digital gold or it's digital capital and it's a new asset class. And BlackRock has been driving the education effort there. I mean, Larry Fink going on CNBC and saying, this is a different asset class. It's a hedge against monetary debasement. It's a hedge against global chaos. And so this is, it's the idea of gold from thousands of years, but it's coming back with a big tech twist. It's gold on a big tech network with all the things we love about technology, mobile phones, the internet, computers, AI, smarter, faster, stronger. And everybody wants to get on the next big tech trend. And so, first of all, that's driving it higher. And that's the fundamental idea is, what if I could transform digitally? What if I could digitally transform capital? There's $450 trillion of wealth in the world that we could just call long-term capital. Rich people just want to stay rich. Other people just want to keep their money. And so that capital sits in the buildings behind you, Mario. It sits in land, it sits in the S&P index, it sits in art, it sits in bonds, it sits in sports teams, because those were the best ideas for the past 100 years. And now Bitcoin's a new idea. It's a digital building.
If you read Lynn Alden's latest report, you know that Bitcoin is the greatest absorber or pure play on global liquidity that there is. It's more highly correlated with global liquidity than any other asset class. And so if the world has to run on debt and the world has to run on dollars, then if their debt train isn't stopping, then why wouldn't Bitcoin be the best performing asset in this world moving forward? So if more money continues to be flooded into the system through Eurodollars or actual dollars, then that means there's more debt and more liquidity, which means that's the best reason to own Bitcoin, right? You say it yourself that Bitcoin is the best pure play on global liquidity. And if your theory proves to be true, like I believe it will, then how will any of these other countries be able to pay off their dollar-denominated debts? They won't. What if they started to invest in a currency or a money that outpaced their dollar-denominated liabilities, which smaller countries like Bhutan and El Salvador are beginning to do with Bitcoin? Last week, President Bukele of El Salvador said that they are going to begin paying off all debts and not be reliant on the dollar debt-based system at all. They see the writing on the wall. There's no way to untether yourself from the global economic destruction unless you start investing in or creating a new system entirely. I believe that the new global reserve currency won't be gold. It'll be Bitcoin. Somehow gold bugs are going to twist this to say that I'm saying that you shouldn't own gold. Absolutely own some gold. I own some gold. I do believe in a downturn, gold continues to hold more weight because it has a narrative that it's better in risk-off environments than Bitcoin does. But that narrative is going to change over time. Gold is not a better play than Bitcoin moving forward. Bitcoin can solve the finite supply problem that gold solves for, while also being decentralized and globally accessible from day one. I do agree with the dollar milkshake theory. I just believe that the dollar milkshake is going to get sucked up and suck up so much liquidity that it's going to be the dollar obesity problem that actually kills the dollar. And the obesity is going to flow into Bitcoin. Bitcoin is Ozempic for the current over-levered financial system, and it will be the winner moving forward. So I'm not saying disown gold. I'm just saying that Bitcoin is a better play for the future. What do you think? Dollar milkshake theory in gold or the dollar obesity theory in Bitcoin? Let me know in the comments. This is Dante Cook with Bitcoin Simply, signing off for the day. Don't miss more fire episodes like this by subscribing to the channel. We're out.